Today, we're going to talk about one of the best wealth building opportunities of a generation. And it's all centered here in Canada. And we're talking about our energy industry. Now, this industry has definitely had its ups and downs. It's had some struggles, but right now there's certain elements lining up that mean that this industry has huge, huge potential. Specifically, we have infrastructure coming online, we have popular support, and we have geopolitical tension pushing Canada to grow this industry, to make this industry much more profitable, and to build the actual egress that this industry needs to achieve good prices. All of that has been huge, and that's been why I've said this industry is set up for a huge bull run, maybe not in the next couple months, but over the next couple years. Here's the thing. We got news just last week that this bull run could last dramatically longer than that. It's all coming from a study done recently that showed that Alberta alone has 6 times the amount of natural gas reserves we believe. I'm going to take you over this article. I'm going to talk about what's important, what they're saying, why it matters, and then we're going to talk about some of Canada's companies and how they specifically are positioned to benefit from this news. Welcome back to Golden Arch Investing. My name is Liam. If you enjoy these videos, please do like the video, subscribe to the channel. It makes a huge difference, doesn't cost anything. We're jumping on the screen here to an article on the Financial Post. It's titled, Alberta has nearly 6 times the natural gas it thought, putting Canada among the world's top 10. And right under that, we have a quote from the Alberta Energy Minister talking about how Alberta's energy resources are looking more like Texas-sized, which is basically saying we have our own Permian Basin and it's way larger than we thought. Let me talk about what I saw in this article. Now, there's some sections I can show you, and there's some things we're going to skip over and just sort of talk about. Specifically, we're talking about 130 trillion cubic feet, which is a 6-fold increase since they were last assessed, which is absolutely huge. They also talk in great detail about shale oil down in the United States. Now, this is a touchy subject. I know I've talked to people in the past who might disagree, and some people who think that shale oil is just in the first couple sort of innings. This article disagrees with that. This article says that while there has been talk of drill baby drill, right? That was Trump's big thing. He said that they were going to really unlock the American energy industry. A lot of the leaders in that industry have been talking about a possible peak in U.S. oil production. And they specifically talk about the Permian Basin. Of course, this is the most prolific oil field. This is the shale oil story. It's that West Texas story. It really is sort of the basin. If you want to talk about U.S. energy, you're talking about the Permian 9 times out of 10. And they mentioned it's a touchy subject down there. This conference that all of this sort of news broke at was in Texas. So, of course, you got the sort of local connection. And the Permian has been a huge boost for that state. It's sort of like a source of, it's not the lifeblood, but like a shot of adrenaline into the economy of Texas. A lot of people have moved down there. There's been a huge amount of wealth created, and it's growing. That's something that maybe not everybody understands, but it's not stagnant. We're not talking declines. We're talking about its growth stopping, because it has been growing for 10 years. I know a huge amount of people that have ended up moving down to Texas, or have gone to Texas for work, or have just, spent time in Texas, because in the energy world, that has been the headliner. It really has. Even compared to here in Alberta, where I live, people go down to Texas because the opportunities there are life-changing. Huge amounts of money, huge amounts of work to be done, huge opportunities to get into this industry. Now, the thing is, if that growth does stop, there's a lot of secondary and tertiary industries that'll suffer, and that's really the people that don't want to talk about a potential peak, because those people do depend on continued growth. These folks here say that while it has hit a peak, it's no longer in the first inning. And specifically, we get the founder of Pioneer Natural Resources talking about this. Now, Pioneer, excuse the pun, pioneered of a deal of the fracking boom, the shale oil boom in the US. They were one of those companies that really, really dug into this trend, and they were one of the most successful. And former CEO, the founder here, says that one of the reasons he sold this company to ExxonMobil was that it was running out of top tier drilling inventory, which is the stuff that has the best possible returns. And since they're running out of that tier 1 inventory, he says they're going to have to eventually transition to drilling tier 2 stuff. He says that the best inventory is going to be run out by 2028, tier 2 by 2032. So people don't talk about that they're running out of inventory. And of course, reserves like this at the rate they're extracting it don't last forever. Natural gas size, there have been questions about the US's ability to feed, and they say both a booming liquefied natural gas sector, which I agree, and a growing domestic demand for natural gas fired electricity generation driven by data centers. Okay, so I don't know how much this short-term data center story is going to impact this, but let's focus on that LNG story for a second, because obviously I've been talking about Canada's LNG opportunity driving up the price we get in Canada for our LNG. They're looking at the same thing down in the States. They're part of this North American market too. They also get way less for their LNG than they'd like. If you compare it to the Pacific markets, to the European markets, they also have the potential to increase infrastructure and rake in profits. The thing is, eventually, if they continue to build capacity to export and they don't continue to grow supply, of course, this is a non-renewable resource. So by growing supply, I mean finding new stuff, building longer term reserves, having the ability to bring more supply from other parts of the country, then eventually you're going to have a story where the price rises and eventually it stops being competitive. Now, that would be good for Canadian companies who have the ability to ship down to the United States, who can produce it at a super cheap cost, and who would likely see an increased price as a secondary effect of that. But obviously, it is a challenge for those American companies. If LNG demand or export capacity, really, which would then spur demand, grows at a really, really fast rate and production doesn't, it's going to impact that industry a huge amount. There have been, real talk about this growth down in the States, but one of the stories, and sort of the big story here today, is talking about the Montney Basin. Of course, that's up here in Canada. That is the premier Canadian natural gas basin. And the story here, the argument being made by the author here, is that these American companies who are looking for the ability to grow production just have to look a little bit north. Because up here in Alberta, in the Montney, we have so much more natural gas than we thought. Let me show you some numbers to make this make sense. We, just this last week, have proven reserves of 130 trillion cubic feet. Previously, we knew about 24 trillion cubic feet. That's dramatic. 130 versus 24 is huge, and that's in Alberta. This means that the overall country total, including that BC LNG, has now doubled in proven reserve. That means that we are in the top 10 in the world. I think we're 9th, as it says on here. We have probable gas reserves of like 144 trillion. That's another 14 trillion. Just a huge amount of potential. And a lot of American companies are going in the next 5-10 years to look for opportunity. And if you've been in this industry for a while, if you've invested in this industry for a while, even if you're just a Canadian investor in general, you know that American money really moves companies. It really moves industries. It's just simple math. They're bigger companies. We're talking bigger money, which means that as Canadian investors, by buying into these companies, we might be front running a huge investment boom. Now, there's no guarantees, but the big story is that the natural gas boom can last so much longer than we expected. And it means it can outlast so many of its competitors, specifically the Permian. If the Permian is looking at a couple of years, right? They were talking 2028 for tier 1, 2032 for tier 2. And then obviously the lifespan of those specific wells. Man, if demand keeps growing, the Montney is going to be an obvious choice. And who dominates the Montney? It's Canada's companies. So many American companies have gotten out of this industry that it's one of the few industries in Canada that's really, really dominated by Canadian-based companies. Now, of course, we could be talking about buyouts in this story. We could be talking about American companies buying assets directly, but I really do think that Canada's companies that own so much of this resource, that have so much of the technical expertise, that have the infrastructure, are just in a perfect position. They are super likely to see investment. Another number that I think really, really goes to show this, 2023, Texas's proven reserves were 20 billion barrels of oil. Canada's 167. We're talking different orders of magnitude here. We're talking decades here in Canada, maybe a century if production doesn't increase, versus years in Texas. And I think that's why these companies are such a fantastic opportunity. We've seen Canada's energy companies drop 20% in a year based on tension, based on fear. When people are afraid, investors should be so excited because you're getting companies who own an asset that is like gold. It is literally, it's liquid gold just waiting. Even if, let's talk some of the worst case scenarios here. What if there's a production cap in Canada? What if we can't get projects built? What if we continue to get the same prices and we can't grow production for 5 years? It won't matter. If you're a 10, 15-year investor like me, if you're a long-term investor, after 5 years, we're talking 2030. Well, tier 1 inventory in the shale oil Permian Basin is gone. Demand is going to continue to grow. And all of a sudden, these companies who will have their stock prices just floating there in limbo as you accumulate shares are going to see massive returns because their resources are in demand and they are real long-term resources. This is one of the few oil plays that's a really long-term oil play. And now imagine a best case scenario. What if we do get the projects built? What if Canada does come together, gets a better price for our resources? We export to more markets. What if the cash flow that companies like Birchcliff are expecting this year follow through and then increase next year? We're talking hundreds of billions of dollars flowing into this industry. And you can get it for a P of like 14. Why would you not want that opportunity? You don't have to fill your entire portfolio, but why would you not want a Tourmaline? These guys have the ability to basically double their production. They have 25,000 undrilled wells right now. Now, if there's a huge amount more to be drilled, what's going to stop them from expanding? They've shown they're ready. LNG Canada already has phase 1. They're going to export so much to the Pacific market. We've got dramatically more lifespan of resource here. What's to stop investors from building phase 2 right now? At this price, if we've got 6 times the reserve, that long-term story makes so much more sense. And all these other projects that might have the demand from producers, the demand from customers, but the worry from the actual companies who build them that maybe there's no economic case, that story is gone. That story's dead. There is clearly a case to build more infrastructure now. There is no better time. The best time to have built this stuff was 10, 15 years ago. Second best time is to do it now. And all of a sudden, they have another amazing pushing factor that says, do this. It's worth it. You will profit. Just add one to the list. That's about all I have for you folks today. I hope you enjoyed the video. I really do think this is a really interesting story. So many things have lined up in Canada's energy sector in the last couple of weeks. I've had to talk about it. I mean, we're talking, cross-country pipelines back in the news. We're talking massive new reserves. We're talking dramatically higher profits than expected. And somehow we're talking about companies who are still down 20% over the last year. There is, I don't know, somebody's missing something. I'm pretty sure it's Wall Street. And I really do think this is a huge opportunity. Thanks for watching. I'll see you in the next one.